Welcome back. Well, the markets have at least defended the 23,000 odd mark, and there have been various attempts, that we've gone out there, we have broken it, but at least for the time being, we've defended that. And given that it's an expiry day, sometimes things can turn on its head, and that's what could lead to a big recovery. So don't rule out a quick fire recovery from here on, but sustenance will be very, very important. As we speak, 23,025 is where we are at. Raunak, Onkar of PPFAS Mutual Fund joins us on the show. Hi Raunak, good afternoon. Good to see you in. Well, Raunak, before we start this conversation, I wanted to compliment you guys at PPFAS because I was looking at all the flexi cap funds, and it appears the NAV from the peak. I think if you could correct me if I've got the number wrong, but I think yours is just down around 4 to 4.5% or thereabouts. And I've seen other funds that are down anything between 15-18% or thereabouts. So good work on that front. Is 4-5% the right number?
Yeah, it's the right number. And thank you, Nigel, for inviting me. Good afternoon as well.
Good on you all then. Investors will be counting on you all, helping them to get through this very, very volatile phase. A couple of other questions then. Let's focus on the largest sector, which is the banking space. And at the start of this year, a lot of people are telling us that's going to be the space to be in, because valuations are attractive. But the bank index itself actually has relatively underperformed for the last couple of weeks. However, if I look at your portfolio, it seems you'll have got things right. Why do I say that? Because Kotak Mahindra Bank, it was an underperformer and you'll be loading up on that one. While if I look at the last couple of months, you'll have actually exited RBL Bank. So give us your analysis of the banking sector, and will you all continue to do more of the same? Kotak Mahindra Bank appears it's one of your largest weights now from the banking space.
Nigel, we only have had 4 private sector banks as the core part of our portfolio. The HDFC Bank is the largest, followed by ICICI, Axis and Kotak. Now, the other RBL bank that you mentioned must be an arbitrage position, which again is not part of the core portfolio. It is a cash to futures arbitrage that we do as part of the cash allocation that we have in the portfolio. But you're right, on the banking side, the valuations, not just for the past couple of weeks that you mentioned, the overall last 4 or 5 years has been a drag for most of the valuations of private sector banks. And despite the businesses have been going okay, they're not been growing very fast, but they are at the size that they are considered, they are doing quite well. I think that should continue over a long run because these banks have a large distribution reach, they have good brand franchises, at the same time they have a large non-banking, which is the fee-based income as well. So it remains to be seen how big they grow and how fast they grow, but I think there's a lot of growth ahead for the banking space.
Out of the way. You all were one of the funds that had a lot of cash in the books. Could you update us on what is that cash number? And given the pullback that you have seen in the markets, are you all gradually deploying, or do you all believe there's further downside in stock?
So we have been gradually deploying. The cash position in the flexi cap fund is about 21 point something %, and the tax saver fund is about 17.5 or 18%. So whatever ideas that we already like and are reasonably priced, like private sector banks, a little bit of Mahindra and Mahindra, which we added recently, or Narayan Hrudayalaya is something new stock we added recently. Some of these areas where we find valuations to be reasonable, we have been adding, but broadly we have not been deploying very aggressively.
What about names like a Zomato, Dixon, which were expensive, very expensive? They may still be expensive, but they've fallen 20% from the peak levels. Would they be attractive for you to enter and buy at these levels?
So 2 things for business models like Zomato or Swiggy, which are newer age businesses. I think the business model long-term trajectory seems to be good, but at the same time, the entry valuations and the understanding of the cash flows as to how stable they will be over a period of time, that remains to be seen. So we study these companies very closely, but so far we haven't made up our conviction as to whether it's something we would like to own and what valuation we would like to pay for them. At the same time, companies like EMS players like Dixon and otherwise are again great sectors to be in with structural changes happening in our country and should benefit these companies. But again, the starting valuations have been very high. So we've been tracking them right since their IPO, but it's been very hard to justify the valuations, but they have actually grown very fast. So it's quite interesting that the company has done very well.
Okay. Raunak, hi. You've also liked capital markets related plays for a while, right? I mean, the whole story of financialization, you've played that through stocks like MCX, I remember, I think even Motilal Oswal. But now, obviously, things are a little different. The market's going through a rough patch, and whether we see, the client addition data, or even if we see the, total, premium turnover, etc., or average daily turnover. Most of those numbers have been trending lower. Look at M6 is looking at a sharp reaction today as well. So what are your thoughts? Do you think it's time to book some profit, or will you remain steady on it?
So I think what parameters you mentioned are actually very normal for companies like these. So when you look at capital market businesses, they are very, very cyclical. And as the capital market cycle draws, the volumes and the profit margins also shrink over a period of time. So knowing that these businesses are cyclical, we have been exiting some of them over a period of time. We have been slowly shrinking our allocations to these companies over a period of time. But those are normal things. They happen with capital market linked businesses, that the volumes shrink, the profit shrink. And when the market is doing very, very well, and like we saw in the past 2-3 years, these numbers can look extraordinarily better over that period of time. So we have to be very cautious as to how much we attribute to these cyclical earnings versus the longer term normalized earnings for some of these companies.
Raunak, HCL Tech is one of your preferred large cap IT bets. The stock reacted very negatively to its numbers. So what did you make of the market reaction to what otherwise appeared to be pretty okay? And what have you done to your holding?
So we have had the same holding since last month. But with companies like IT services, those are more or less stable businesses which generate money through services selling to clients. Now, over a period of time, that cyclicality has also been expected, where people were already building up these companies based on the anticipated growth that they will have. And those numbers came true. So it's not like the growth has been over and above what the expectations were. So some of these quarterly aberrations will continue to happen in the stock price. What we look at is whether these companies will stay relevant over a period of time. How are they competitively positioned compared to the GCCs coming in? Those are some parameters we are really keen on understanding. So it remains to be a large part of the portfolio. It is part of both FlexiCap as well as tax saver. And IT services, the space is also very stable, cash generating space, which has a long runway ahead of it.
Then one final question then. 17% holding, cash holding in one of your funds, 20% plus in the other one. What are the opportunities you're scouting for?
Actually, everything. So our research team has always been busy in trying to find new sectors, new companies, new ideas. So the number of ideas we pitch internally and discuss internally has always been the same. So we keep on studying. It does not mean that we will swing at every ball that we see. We will wait for the right pitch and we will wait for the right ball. And then when the bounce is right, the valuation is right, then we will see that this is a company we would like to own. And we have added a couple of new stocks in the portfolio as well. So it's not like we have not been studying companies.
Tell us about the new stocks you've added.
So we've added Narayan Hrudayalaya and Mahindra.
And Zomato, has fallen from 300 down to 220, 218. At what point does it attractive? Because you've been studying it for a while, but waiting for the right entry point.
I wouldn't know, because the business also keeps changing. So at one point when the growth was very high, you would probably sort of justify some of the pricing of this company over a period of time. But we have to see how the growth is sustainable, where the normalized cash flows of this business lie, and whether the business model also stays relevant, because this company keeps adapting over a period of time with different services that they keep on offering. So some of these companies are good to study for now, I think. But for us, maybe somebody who understands it better may already have it in their portfolio.
So cash level, just to go back to that point, I think at the peak it was some 16%, right, Raunak? Now it's come to about 11% in the portfolio, right?
At the peak, it has been 30% in 2018. Now it is at about 21 point something percent in the FlexiCap fund and about 18% in the tax saver fund.
At about 21% in the FlexiCap fund. Wow, I didn't know about the 2018 peak. So still not deploying, right? I mean, there are a fair amount of weightage, I guess, increases on some of the BFSI names that you've discussed. The capital market plays there. Also, you're cutting positions. You're still not buying. As and when you decide to, what is looking the best, where valuations and growth are meeting your expectations? Which are the sectors where perhaps you'll bite first?
You're actually buying, but not very aggressively. So like I mentioned, we added a couple of new stocks, and the existing stocks where the valuations are still reasonable, we continue to add and maintain the positions and the weights in the portfolio. But we're not very aggressive in finding new ideas and buying something. We keep studying different ideas.
I heard something very interesting on Zomato, since Zomato came up a few times. That Zepto wants to IPO, right, in the next few months or so. Zepto, I think we were just checking the Zepto app and finding things much cheaper on Zepto. Yeah. So basically, they are the price disruptor in that sense. Now the thing, and they've done 2 rounds of fundraising recently. So they have cash of about, and this was from someone who owns, so take it with that. They have Zepto's cash of about 6 or 8 months in the bank. And they want to IPO. The point is, can they continue to be such a big disruptor price-wise without hurting their own prospects at the valuation that they want to come in? So that's the, in a way, that's the bullish view, that they will not continue down that sort of, price disruption path, lowering,
if they want to
cutting
come to the
prices,
market.
etc., if they want to really tap markets and do a public issue. But on the flip side, I think what is also interesting is, if price is the only moat that you have, right? If actually price is not a moat, then should you actually get these kind of P
be
multiples?
looking at the businesses in such light? I think that's a great question, Prashant. And I remember we were discussing this just after the numbers came in, the market closed. That, I mean, more or less, you're getting the same product. The service quality could be, quantified or qualified in terms of the time of delivery and the fact that you get the right products. But I still think that price is the biggest differentiator right now, which makes people switch from one to the other. So I think this is pretty interesting.
If there is no moat at all and price is the only thing, then, it's not. I mean, airlines, for example, right? I mean, one airline gives you, say, a seat which is $100, $200 cheaper. People will take it. I mean, it's similar. And that's why I guess airlines have never really got a very high sort of earnings multiple or whatever.
But there you can still argue in terms of service standards. Back in the day, you could talk about,
You were talking about the platforms, right? The platforms with service, So not the airlines, but the platforms.
I was talking about, I'm sort of making a point that airlines also as a business, there's no competitive advantage in that sense. Service, perhaps, yes.
Maybe to some extent. But here with platform companies, price is a massive sort of determinant of which way the customer flow goes. Well, with that, let's take some, a final quick word with Raunak. Raunak, on the market as a whole, overall, I mean, clearly you guys are cautious. You're deploying money also very judiciously. Earnings estimates have been coming down. What do you see ahead? I mean, this is kind of a guesstimate sort of a question, but next 1 to 2 months, it's been a tough now, almost 3.5, 4 months?
I think 2 months is a very short cycle to even estimate. But I think over a period of time, we are seeing businesses which have cyclically peaked to some extent are seeing some normalization in their overall profit and growth trajectory. And if you see companies which have been downtrodden and they have been struggling to maintain valuation at interest at least, those companies are seeing some relative attractiveness in terms of the business, which is anyway doing well, but valuations are now catching up. So I think the market is behaving exactly what it does. The volatility is, I think, a feature of the market and not a bug. So we should understand that, don't overpay, protect your capital and play for the long run.
Okay, all right, Raunak, thanks a lot for joining in. You'll have done a relative outperformance till now. So, now you'll have to keep it up so that your investors and all your participants are happy. Thanks a lot for joining in. Appreciate you giving your views. By the way, as